Hey, this is a good one for us today. We're going to talk a little bit more about real estate as an investment as opposed to the costs associated with you needing a loan and mortgage payments and interest rates and so forth. So, a lot of times when we talk to first time home buyers, they'll get some advice that says, oh, you should wait. And that wait could be based on a couple different things. It could be based on wait until you have more money saved up, wait till house prices come down, wait till interest rates fall. And those things are all very predictive, and we don't really have the ability to control house prices or interest rates. To an extent, you might be able to control how much money you're able to save, but that takes into consideration you not already having a whole lot of debt. What I want to show you today is just a couple different things. So this is as of the last quarter of 2023. The national average appreciation in home purchase prices was 2%. Over the last year, it was 5.5%. 5 years, it was 57%. So we're going back to 2019. If you bought a house right before COVID, you're sitting on appreciation that's almost 60%. I don't know that there's another investment out there that operates like this. Look what happens to people that started way back in 1991 who are probably of retirement age right now and maybe getting ready to sell that house and cash out. An average of 322% appreciation. Now let's go back to quarter and let's talk about state specific. Let's deal with Pennsylvania. That's where I'm located. We can deal in Maryland and Delaware as well. But look at Pennsylvania. We're up about 3% this quarter, which is a fairly healthy investment. If we go out a year, and this is where I want to focus, Pennsylvania's up 8%. All these states in green are up by more than 20% of the national average. So let's just use Pennsylvania. If the mentality last year in February was that you were going to wait till prices went down, you are now paying on average about 8% more for a similar property. So for instance, if you were buying a $300,000 house last year, that house is most likely now worth $324,000, which means if you were trying to save up a percentage for a down payment and you were trying to save, let's just say 10%, well, now instead of needing 10% of 300,000, which is 30 grand, you need 10% of 324,000, which is $32,400. So trying to wait can sometimes bite you in the butt. We still want to deal with affordability. We still want to make sure you can afford the mortgage payment. But if you have 5% down or 10% down or 20% down or 50% down, who cares? The interest rate doesn't matter if you can't afford the payment, and the mortgage payment doesn't matter if you don't have the down payment. So the time to buy a house is when you're ready. And it's also most important to keep in mind that when you buy a house, you're immediately going to start to take advantage of the same appreciation that seller had. So this big slide we see right here was back in 2006, 2007, 2008. And that's when the market crashed due to toxic appraisals and loans that were given to people that shouldn't have had them. But look what's happened ever since then. We've had a small correction right here, but that was basically due to the fact that a lot of buyers jumped out of the market at the end of the year. Now those buyers are getting back into the market because interest rates are lower, and you're going to see those prices most likely go back up unless we get a ton of new inventory. So keep in mind, when you're buying a house, you need to treat it as an investment. Certainly want to make responsible decisions, but it's okay to make a mortgage payment. It's just like contributing to your 401k. At some point, you're going to sell that for more than you paid for it. If you have any questions at all, you can reach out to us at AndyLoan.com.